Hello traders, in today's video, I'll be sharing my own opinion on the direction of gold in the coming weeks, okay? And what I think gold will be doing and how I'll be positioning myself to take advantage of any trade setups that can be produced from gold. So without wasting time, we know our normal drill, top-down analysis. We're going to look from the monthly down to the 4-hour time frame. Right now, the monthly time frame, our higher, the most recent high that have been produced, okay, in gold is this high here. This is the high that have been produced. What is the low that created that? Is this. So technically, gold is now in a bullish territory, okay? We expect price to move, and that was why price reacted here. Now, what do I mean? If you look at your Fibonacci, you take your Fibonacci and then measure from this low to this high. Price right now is in discount. So if you have been shorting this market, you have to be careful the moment price start trading into what? Discount zone. Okay? Because right now price is in discount zone, and you can see that was the reason why price pushed to the upside. And there are more potentials also. We still have this demand zone here. Okay. Price will come down here. But that is when it does, we can find a reaction. Okay. So our weekly is still bullish. Our weekly is bullish because we are in a discount zone. Okay. Because this low broke structure. Now, if you don't understand what I'm saying, this is it. This low broke this structure here. That's it. This is a break of structure, and this is where others came in to push price to the upside. And then we have liquidity. We have liquidity here. Okay, giving this POI, whatever POI we see. Now in the monthly, we don't have imbalances. Okay, and that is another sign that because we do not have imbalances, price may respect some levels up here and then continue trading to the downside. Probably gold wants to go lower because of that. But because this is the monthly time frame, I'm not worried about the inefficiency in price here. Because I know if I go to the weekly or daily, I will see the imbalance, especially here. Okay, it's where this strong can be. So we have a break. You can see market has been bullish. A break of that structure, so we expect price to move higher. Now, this low failed to continue this move, and you can see price already taking that low. The reason why price was coming down was to take out this low, which has been done. Okay, so now we need to look at the weekly to now understand what next. Okay, now look at the weekly. We have an IPA candle. Okay, this was manipulation to the push. So we have an IPA candle which serves as the demand zone that push price all the way up here. And now, what makes this zone valid are this liquidity inducement, this support and resistance liquidity. You can see these are support and resistance liquidity here. A lot of traders have been trading this support and resistance, and all of a sudden they'll be flushed out. Okay. They'll be flushed out of that move. So right now, price came in here. In my member area, I told them before this move that we are expecting a bullish movement in Euro USD. Just that the month of October was very, very manipulative. Okay, we had some not so good trade in that month. So because of that manipulation, this month was an easy month to trade. October was a difficult month to trade. I have to admit that. Okay. So now, price move out of this area. Okay. You need to mark out the recent lows and high. Now this high took out liquidity, and right now that high has been broken. So gold is the weekly is confirming my monthly bias of a bullish market. Okay, so I can decide to mark out this area, okay, on gold, that when price gets to this area, okay, I'll be looking for a way to buy, and first target will be this, second target will be that, and so on. Start targeting those liquidities based on intra levels, okay, based on intra levels. So now we have established our bias here. So right now price is at a supply zone. Now this supply zone, which is also an order block, okay, was responsible for a break of structure. So it's a very powerful obstacle. We don't expect price to just move and break. You know, some people are very funny when they say, oh, gold is bullish. The data from the US and all of that is showing weakness in dollar, and they want to buy in a supply zone. That's the biggest mistake I used to make back then when I was trading, when I started trading. Price would be in a demand zone, I'll be looking to sell. Price would be in a supply zone, I'll be looking to buy. That is a big mistake, okay? Respect levels. When you see a supply zone, respect that level. Those are levels. If you are buying, you exit from those levels and then look for short positions, okay, and enter that trade. So right now we are currently bearish, okay, based on the weekly. And where is the target? We are targeting this area. Then from there we can switch to bullish to be in conformity with the monthly. Okay, so I'll be bearish on gold in this coming week, especially once I see my confirmation here in the 4 hour. I'll be bearish up until we get here before moving up. Once price is in here, I'm looking for a strong reason to buy. Okay, the only reason why we might decide to start going bearish is if this move failed to do its job of creating higher highs. Then that makes all of these weak areas when price decides to come to the downside. Okay, take note and remember the supply zone, the demand zone on the weekly. This candle this week down here is possible price will trade back there. So all you need to do is you trade your levels. When price gets to your level, you trade. So this is what we are expecting this coming week. A push down in gold price at least to this point. So on the daily has not given us confirmation, but has given us a reaction, okay? And price even went deep to mitigate the daily supply. Okay, that was beautiful. But I didn't take this trade. I was very busy this week. Okay, I was just monitoring my previous trade. But this week I'll be very active, at least catch gold prices. Now, where am I looking at buying this gold market? I'm looking at this level, this rally base rally. I'm looking at this level, and I'm looking at this level. Okay, these are the levels I'm looking at. Let me use the trading view rectangle tool. I'm looking at this level. That is demand zone. I'll be looking at this level as well. Rally based rally, and then I'm looking at this level. Okay, these are the levels I'm looking to take a trade. The first one is for scalping and intraday. Okay, I will never open a swing position from here. Okay, I'll be opening position based on scalping. Now, if I can hold that trade, then it turns to swing. That's another strategy I use. The scalping, it turns to swing, then you take profit along the way and allow the rest to move. Okay, here also scalping and intraday. This area is for swing. This S string will be my swing trade. So what it means is when price trades back in here, I'm looking to scalp and also they trade to some key supply levels in the lower time frame. Same thing here, and ultimately here potential swing ideas. Okay, so these are the levels I'm looking at to buy on the daily, because selling right now is late to come in to sell because we're already close to these zones. So unless if I see a pullback in the 4 hour, now on the 4 hour we have a chalk here. So we have an opportunity for a sell. We wait for price to take out this inducement here. Okay, trade into this is my point of invalidation. Once price takes that liquidity, I'll be looking for a way to enter, especially in the lower time frame. I have the time frame I use in confirming this 4 hour. Okay, you should also do the same back test. It's not all the time you jump to the 1 minute. I see a lot of traders, they see a daily zone and immediately they jump to 1 minute, start looking for chalk, and that's why your chalk gets fail. There are steps to these things. Okay, so I will expect price to trade up, especially now that I think this cleared this liquidity. You can push up here and then we move. If I'm selling here, this is where I'll be taking most of my profit out here. Okay, because I'm expecting price to react here. Now, do you understand? Trading is simple if you make it to look so. Okay, avoid all the complications, putting so many charts, so many indicators on the chart. Okay, so on the 4 hour, I'm looking at price taking this liquidity. Okay, once price takes this liquidity, I will look for my entry. Okay, I'll look for my entry. Price take that liquidity, then move to the downside. This will be where I'll be taking most profit. I will first take some profit here because if you are entering here in intraday, this will have given at least 4 hours depending on the trade setup. You can take positions out here, and also this hidden base. In fact, this is a powerful zone on the daily. I'll be taking most position here because this 4 hour hidden base has liquidity inducement already below it, above it rather. So it makes sense to look for a buy in here. So this is my observation on gold from the monthly to 4 hour. This is where I will stop. I won't go to the 1 hour. If you like this teaching, go like this video, subscribe if you have not subscribed, share this video so it can reach more people. I will see you in